episode 10B, second half of the interview with Liz Ward. They were talking about transforming the supply chain through corporate VC.
Question for you, because many founders don't go into business saying, I'm going to have the best cap structure. I'm going to optimize my cap table, on day one, right? They're focused on the business. How do startups get connected to really great CFOs, and how do they vet them?
Well, I think
Now
that's
I'm interviewing you. Welcome to my podcast.
Well, I think the sooner you start, the better. I always go back to the saying, begin with the end in mind.
Yeah.
That's how I've always operated my entire life. I had a vision when I was 10 years old of what I wanted to be when I grew up. And every 5 years or so, I'm looking 5 years forward. And so a lot of people don't really understand what I'm doing now because I'm actually playing 5 years ahead. They just don't realize it until 5 years later. And that's how you need to think if you're truly going to be a disruptor as a startup in any sector. It doesn't matter. You have to be thinking 5 or 10 years ahead, but you also have to optimize for today. Because I've said this many times before, we are essentially the sum of all the decisions we make. Like where we get to in life is based on every little decision we make every single day, right? And so you can't say, well, in 10 years, I want to do X, but then not start moving towards that by making decisions that will get you there, right? And so I think with all startups, the advice I would give them is very early, and I don't mean when you're at like the friends and family round necessarily, but maybe that early, when you're getting to that stage where you're contemplating doing a raise of angel capital, for instance, and you might be selling 10 or 20% of your company, like that's material. That's a relevant, very relevant decision that could have repercussions for many, many years. And so I think that the smart founders, once they've kind of proven that they actually have an idea that could become a business and they start to get some traction, they would be very wise to reach out to folks in the industry and find the right advisor. They don't necessarily need to hire a CFO at an early stage, but they certainly should be consulting with CFOs that have built companies and scaled them in the past. And there's plenty of consultants out there that can do this. And so finding the right one is really about reaching out to folks in your industry, like seeing who works at different funds, talking to other founders to see who they've used, et cetera. But I think if you start with the end in mind and you have a 5 or 10 year plan for your capital table, and then you integrate that into the operational plan as well, that's where there's some great synergies. Because if you have both of those optimized, you're going to probably be successful.
Yep. Yeah, Zach, we should do a webinar with you and our startups.
Yeah, let's do it. It'd be fun. I'd love to. Let's switch gears a little bit. And I wanted to ask you, is there anything that you're thinking about right now in the market? It could be supply chain, it could be innovation and AI, it could be capital raising, anything that you're thinking about that you think others might be missing that's important.
I'm going to say something that's obvious, maybe not, but I'm thinking deeply about ways to speed up corporate innovation. Because I go back to, there's a lot of interest, there's a lot of money, there's a lot of startups, everyone wants to be a founder, but it goes back to the commercialization problem that we talked about, in that there's not enough buyers necessarily, or an appetite, buyers with the agility to change and to move. So I'm thinking very deeply about corporate innovation and ways of even like, how do you incentivize everyone in your company to want to try new things and want to do new things, to want to test different ideas, to want to toss different ideas out there? Like, how do you really create a culture around that? This is really hard to do, but it's more this entrepreneur motion that I think is very ripe for success, especially today. And I think it goes beyond, the quarterly objectives or you know, the annual kind of like incentive structure, like there needs to be a lot of creativity involved in like, how do you motivate change behavior to really like fire this thing up? Because the corporations they have great bones, and they have it's a perfect testing ground, to innovate, but also given their scale, the impact is so much greater.
So I think a lot about this too, because I've worked at uh, three huge financial firms that each have more than $1 trillion in assets. And in the course of working at those firms, I also was the counterparty to basically all the biggest financial institutions in the world, especially certainly anyone in the US, I interface with for many, many years, over a decade, right? And the takeaway I had from that experience, which led me actually to start my own company, was that the bigger the company, the less innovative it will be. And most of the Fortune 500 type companies, certainly at that time, 5 years ago, were doing almost nothing when it came to innovation. Like they would talk about it, but having been on the inside of them, their ability to innovate was essentially zero or slightly above that, but very, very low. And so my view at the time was, wow, these are great folks to sell businesses to, but they'll never innovate anything internally. They'll just basically use their big cash coffers to go out and buy whatever looks interesting in the space. But I think that's changing, to your point. And it sounds like the next revolution really is corporate innovation. And so do you have any thoughts on like what some of the best models might be for these really huge companies that haven't innovated historically?
Well, so I can tell you the story of ZEBOX. So our parent company, CGM, they are one of the most profitable companies in Europe right now. One of the largest, third largest container shipping company, and the fifth largest logistics provider in the world. And so they've amassed their growth through all sorts of acquisitions, especially over the last, 10 years. And it's a second generation, family owned, family operated. Rudolf Sade is second generation. He's the chairman, CEO. And the impetus of ZEBOX was him looking around the four walls of CMA CGM thinking, oh my gosh, how do we create this agile innovation environment inside the company as it continues to grow into this behemoth? So I think it starts at the top, and the willingness and the appetite for this at the top. But there's all sorts of ways that companies can innovate today. You mentioned a couple, but I see this like another idea with the zombie apocalypse startups is really co-partnering, co-innovating with corporations in a very focused way. I see this happening today. I also see the venture building happening as well, the venture studio building, this motion taking off inside the corporation for problems that corporations have, and they just haven't found the right solution yet. So they're thinking, how do we build one ourselves? And there's all sorts of really great founders that are probably perfect to help them build within. There's great talent now. But there is all sorts of ways, and I go back to the power of incremental innovation, of how do you just get a little bit better than yesterday? It doesn't have to be this disruptive innovation type of thing for it to be innovative, whether it be, robots in the warehouse or autonomous X, Y, and Z. You can start with just automating your billing process, So it's really like this mindset of just a little bit better. It's so much of it is like self-improvement. How you think about self-improvement, and it's incremental, and over time it leads to like big results, and it just creates this wave of energy and momentum that's all going towards some direction that you're excited about.
It's funny because one of my friends who's in my doctoral program at University of Florida works for one of the major car manufacturers, and we were talking the other day about how basically about autonomous vehicles, right? And where the big manufacturers are and getting there. And he said, look, you don't realize it yet, but everything we're doing is incrementally moving towards autonomous driving, in the sense that if you
Yep.
think about the newer cars that have come out in the last couple of years, they have all these features that are helping assist the driver, like letting you know when you cross over into another lane, having cameras, when you back up. Like in the old days, there was no camera, you had to look behind you, and also some cars now can basically self-park. And these are all little things that are getting us used to being assisted. And eventually, when we
Mhm.
go from that to the next stage, when we go fully autonomous, it won't be a big deal because we'll already be almost there. And so over the next like 10 years, that's what all the manufacturers are doing, right? It's kind of like a sneaky way of socializing us and getting us used to this, so they can just say, boom, now autonomous cars are fully here, and that's
Yeah.
that.
Yeah. I'm thinking of cruise control. I mean,
Exactly.
maybe that was the first.
I mean, listen,
Yeah.
if
I
you've got
mean, we
cruise
got,
control,
yeah.
and the lane, lane assist that's beeping every time you move off, and you've got, self-parking, or, autonomous parking,
Yeah.
and you've got the cameras behind you. I mean, you're already, 50% there. It's really not that much further to go, right?
Yeah.
So I just thought that was
Well, it
interesting
is
in terms of
though.
how it's
And
systematic.
and I think you're bringing up something that's important with autonomy, which is the use case. Getting really clear, like you talk about drone delivery, for instance.
Hmm.
Now, like drone companies are getting very, very clear on what exactly is the use case for this. And I think that's the key for autonomy, because to say, oh, all things are gonna be autonomous, I don't know if we really want that, frankly, with given all the cybersecurity uh, concerns, which are very real. I don't. I think it's a very hard problem to solve. But to your point, it's incremental, and we're getting a little better than yesterday.
Yep. So speaking of that, how do you view artificial intelligence in terms of how it's going to affect the supply chain or the economy more broadly?
Yeah, so I like we're talking about innovation. I view it as like in two buckets. It's the incremental and then the disruptive. But it certainly is a buzzword, and frankly, it's been around for a long time, right? Um, your ARI reminds me of artificial intelligence, applied real intelligence, you know, but the incremental stuff, I think a lot of this is like voice and natural language processing. A lot of the like RPA, like bots taking care of like automating small tasks, whether it be like data entry or invoicing reconciliation, some of those more incremental things. And then you have more disruptive AI, tech, which is like the humanoids, the robots inside the warehouse that are kind of like they're human, you know. And there's a lot of really great progress in that area too. Again, like it's a little bit further out, but it still is all in the nature of AI, and that's going to be a really great disruptor once it happens, because you think of all, especially in the supply chain, there's a lot of like messy, dangerous the dull, dirty, dangerous stuff in the supply chain. So using AI to enable as a human enabler, not a replacer, I think is how we all should be thinking about it. What can we take off some of these roles today, these jobs? They're not going to replace the job, but they will augment some of the functions inside that job that aren't necessarily desirable or aren't a great fit for a human to do. And that frees up a lot of time to really think through how best to utilize the human. But I view AI as just this great human enabler that's there to empower the people, because the people run our supply chain with the help and support of technology.
Is there any low-hanging fruit in the supply chain where you think AI will
Yeah.
make the biggest impact?
Yeah, we're seeing a lot with demand, like predicting demand, automating, like I said, a lot of those routine tasks in the customer service function and as well as training. You think of, a lot of the generative AI, like the chat GPT, imagine that internally inside your customer service, as a training role, as a training function for employees to use. And especially in supply chain, because things, every company every customer has their own way of working and their own way of billing, different freight, different ways of moving it. There's a lot of details involved. And I see like AI really like accelerating these departments that right now are kind of like trying to manage it all. And as a result, that's where the highest attrition normally is too, which is no surprise. I mean, when have you talked to someone who visited a call center recently and they left saying, God, I can't wait to I want to get a job there. Looks like so much fun. Like that never happens, right? So there's a lot of low-hanging fruit inside these very manual intensive departments or functions.
I think you hit on a couple of things that really resonate with me. And one of them is predicting demand and also relatedly predicting pricing. And this is something that I've spent basically 15 years on as a fixed income investor and as a bond trader, right? In fact, before I started ARI, I was looking at joining a startup that was using machine learning and AI to predict where bond prices would go next. So it's taking all the data out there and saying, okay, based on everything we know right now, what's the likely next price of each bond in the market? And so I've always thought about predictive pricing because pricing is driven by, of course, supply and demand. Like that's literally what drives pricing. And so having that capability by leveraging AI to more accurately predict when is there going to be demand, how much is that demand going to be, and therefore what can we charge for our services, I think will enhance margins, potentially considerably. And so that's one thing I think a lot about. And another thing you hit on too is, of course, automating routine or riskier tasks, whether it's HR where it's routine and boring and people quit, or it's risky because it's in a warehouse or somewhere along the supply lines where there could be potential for humans to get hurt. So you want to try to take those and utilize AI and robotics essentially as much as you can. But then the other thing that I really think is interesting is education, right? And being able to train people more effectively. So when I say education, I'm not thinking about a 4-year degree necessarily, but when you start a new job, as I think everybody knows, like most of the learning as a professional occurs on the job. It's not what you learned in undergrad. It's what you are learning on the job, every day. And there's usually a pretty steep learning curve in the beginning. And from my own experience, I always felt like the first 9 months were kind of challenging. And then by the time I got to a year, I felt like I had mastered that job. Right? It didn't matter if like people had been doing it for 15 or 20 years. I'm like, listen, 9 months, it's going to be hard for me. A year, I'm going to be equal to the person who's been doing it for 20 years. And I don't want somebody, if I'm running a company, I don't want somebody who's been doing the same thing for 20 years because they have 20 years of experience technically, but they really have 20 years of 1 year of experience. It's literally like that same 1 year repeated 20 times. And so the value that they're actually adding is very low. Exactly. And you're paying them a lot of money because they've got 20 years in a seat, but you could go out and hire somebody else who in 9 to 12 months can probably do that job 95% as well, maybe just as well, maybe even better. And so what I've been thinking a lot about is how can we utilize AI to help employees in on-the-job training get up that learning curve faster and also leverage a lot of the information that historically was in the heads of the senior people, right? Like there was all this like institutional knowledge that was in the heads of all the senior people, and they didn't really share it that effectively, right? And now you can
There wasn't a way to share it effectively.
Exactly. So it wasn't that they were being selfish or greedy. It was more that, to your point,
Yeah.
they didn't really have the tools to effectively take all that institutional knowledge and transfer it to the next
Mhm.
generation, or transfer it to the junior employees or the lower wage employees. And now with AI and other automation tools and technology, you can take all that institutional knowledge, or the majority of it, and you can basically get it into the minds of the people that historically were not accessing it, right? And so to me, that is going to increase productivity immensely. So there might be fewer jobs, or there might be, roughly the same amount of jobs, but each person in each seat is now going to be
Yeah.
much more effective and efficient.
And I also think the folks that have the years of experience, they actually are incredibly valuable, because you think about the accuracy of information. Sure, you can train someone to do a job, a function, to perform tasks, right? But how do you know, like, like what's the barometer for the quality, right? In the accuracy of that information. It's not just the speed and the velocity of it. So it's going to be interesting, but I agree with you, Zach. The training component is huge, especially in, really complicated industries like the supply chain, where there's a lot of moving parts. It's high stress. Um, not the most desirable jobs necessarily, but hopefully AI can help change that.
So I want to transition to talk about founders in particular. And you
Yeah.
work with many, many founders. You continue to work with many
Mhm.
great founders. And I think you've always been really, really good at working with people and identifying what they do well and areas where they can improve, and then helping them get there. And so you're the perfect person to talk to about this. And I wanted to start
Thank
out by
you.
asking you, you're welcome. I wanted to ask you, what do you think the best founders tend to have in common? Are there certain traits that they share?
Yeah, I think really good founders have a heightened sense of awareness, self-awareness. Um, I think really good founders are very humble, which makes them really good people to grow and build teams, where they just have this kind of mindset where they want to just give it back to the people. They want to create opportunities for their folks to grow and explore. But they're cool with not getting all the credit. Actually, it's maybe more uncomfortable for them to do it. I think that folks that are genuinely really curious, natural problem solvers, like we mentioned early on, with getting really obsessed with your customer and the pain that they go through and finding ways to solve it. Having that curiosity, natural curiosity, is just so important, with the side of empathy as well. And then I just think that there's this sense of like grittiness, where you're focused and you want to succeed at all costs, and to a degree, which is, I shouldn't say all costs, but you have this kind of sense of spirit of like this building motion inside you, where you gotta just see it come to fruition, like you're so excited and motivated to do it. And that's transcends into your culture too, and your productivity of your employees and the quality of what you do. So I would say the grittiness, the curiosity, and the heightened self-awareness with a dose of humility.
Yeah, I think those are great.
You know,
I would say for me, it's rank. If I were to rank them, I would put grittiness at the top, slash relentless, slash persistent, resourceful, resilient. They're all to me kind of the same thing. In other words, you have to be all in. I like this idea of burn the ships behind you, right?
mm,
So once you've, kind of set your path, people will often say, well, what if it doesn't work out? Well, I'm not thinking about that. I don't think about
mhm.
that. I think about all the things I need to do so that it does work. And I'm never going to stop until I get there. And I believe you really have to have that mindset, because if you're always kind of hedging yourself and you're not
Yeah.
all in on what you're doing, like you're probably not going to get there. You have to be crazy in a sense. You have to say, I am willing to bet everything on this, and I believe in myself to a degree that very few people do. And this is always kind of balanced with this idea of humility, because I think you have to be incredibly confident and technically, definitionally overconfident in order to be a founder and a great founder. Because, and I've said this many times, if you look at the numbers, you would never start a company, right? Because most companies fail, very few make it really big. And so you have to be overconfident in the sense that you believe you can do something that others have never done and that very few people are able to accomplish, right?
Yeah. But
But
I always say, Zach, that the most confident people are the most humble people. Because they don't need the validation, the external stuff. It's within, you know, and so they don't need to project, right?
yeah,
And people tend to want to align themselves with folks like that. They want to root for them. Like, you know, they want you to be successful in a way. Um, one other thing you said with the relentlessness, I would also say too that it's okay to, and actually recommended to like take a pause, like just a second to figure out, why am I doing what I'm doing? Is this really aligned with what I want to do and what I meant to do, you know, in this lifetime, right? Like, does it really bring me like a sense of joy? Do I feel like I'm making a difference in how I'm spending my time, which is our most precious resource, is our time, right? And and if it's not, it's okay. Like, it's all like a puzzle. It's like one experience leads to the next, and like you needed that experience to go from here and there. So I also think it's okay to give yourself a little grace and to pause and be like, all right, let's do an assessment very objectively, what's working, what's not.
yeah,
But
I
if you
think
feel like the business model is working and it adds value, like, yeah, go.
that makes total sense. And, it's another thing I've been thinking about a lot too, in terms of the current fundraising environment, is if you've got a lot of options of companies to invest in, if you're a VC, who do you want to work with, right? How do you identify the right founders? And to me, it's really like a signaling process, right? Because the information is so imperfect that you're never really making decisions based on a lot of like hard data in the startup
Mhm.
ecosystem. And so a lot of folks make decisions the best way they can, which is a lot of it has to do with intuition and heuristics that they have in terms of like what's worked in the past. Like rules of thumb is another way to describe heuristics. And one of the things that I wrote about recently, in a column for Built In, which is a website for founders
Oh,
that are
yeah.
to scale their businesses. It's basically 10 things that founders can do to put their best foot forward and more effectively signal that they're a good company to invest in. So it's like 10 fundraising strategies,
Mhm.
but it's not really about fundraising. It's about putting your best foot forward so that you're an attractive person
Mhm.
that VCs want to invest in.
Yeah.
So just I'm curious what you think of some of these. So this is the top 10 list, okay? The first is, and this is kind of geared towards raising capital, but it's applicable to pretty much anything, I think.
Mhm.
So the first is be prepared, right?
Mhm.
So be prepared, like know your data, know your company, know your plan, know your ask. Another is be accurate, right?
Mhm.
In the sense that,
The preparation.
yeah, and there's a lot of numbers that are going to be off in the startup ecosystem. Like most numbers don't really mean that
Yeah.
much. Like we were talking about earlier with TAMs that are just in the billions or trillions of dollars that aren't even close to reality.
Yeah.
So my view is that VCs and other investors are going to find founders more attractive if they're actually accurate in their assessment of what their company is doing now and what it's going to do in the future. In other words, instead of saying I've got this amazing vision that's going to revolutionize the world and make $1 trillion, say here's what I think I can realistically do.
Unit economics.
Exactly.
Yeah.
And so that's number two. Be truthful. That should be first on the list. But being truthful, I think, is very important, because if you don't have integrity, then nothing else really matters.
Yeah.
And there's a lot of people that I think inflate to the point of almost lying what they're actually doing or what they're capable of doing. And
Yeah.
I don't think that really comes off well in this environment. It's like,
yes. And it causes problems down the road.
yeah, exactly. And so that was number three. And then be reliable. So just do what you say you're going to do.
Mhm.
Right? Like if you say you're going to do X, then do X. And be responsive. I think this is really important and so easy to do, but also so easy to screw up. If you're getting a call or an email from a potential investor, get back to them. Acknowledge their email, acknowledge their call, even if you don't have the deliverable ready for them. Say, hey, I'm working on it.
Received.
Yeah, exactly. So those are the top five. And then be accessible, make your team accessible, be pleasant, because if you're an investor and you can invest in 100 companies that are all roughly equivalent in terms of their potential return, do you want to work with a jerk, or do you want to work with somebody that's nice to be around, right? Then I would say be humble. That was on the list as well. So what you already said. Be appealing. When I say be appealing, I mean that's really saying leverage the good things that others are saying about you, and leverage the FOMO effect, the fear of missing out. Like have references that you can introduce potential investors to, get them, basically have good people saying good things about you. And that makes you appealing as an investment. If other reputable people are saying, hey, we really like this company and this founder and this team, I think that resonates. And last but not least, be brave. And when I say be brave, I mean, make the ask. Like, don't be afraid to say, hey, we could actually use twice as much money as you're offering, and here's why it's going to be put to good use. And so I think, a lot of people don't, they're so happy to get anything that they don't actually make the ask. And, when I was a bond trader, I had some very good mentors, and one of whom was one of the most successful bond salesmen on Wall Street. And he said, you have to make the ask, right? You have to ask the customer, or you have to ask the counterparty for what you really want, because if you don't, they'll, how can they fulfill it, right? And so those are some of the things I was thinking about in terms of what founders can do now immediately to be more appealing. But going back to your view on founders, what do you think are some of the problems that they all share? Because, irrespective of industry, they share the same problems.
I think, I think it's on the team building side, potentially, although we work with more Series A startups, and it's not like we're investing in them. So we don't really we're not privy to the team building part of it, but I just sense that it's just generally a tough thing to do. And whether you're a startup or not, like it's hard managing people. There was a marketing, like choose your words wisely. And all the buzzwords, all the like chit chat, like get focused, take fewer meetings so you can prepare for the meeting, and just be focused with your message. There's a lot of gimmicky kind of, wasted time and airspace with folks that are just into the buzzwords, and they're not really communicating with a clear common sense, and it's and with language that's like easily understandable. Like we were talking to a company yesterday, and they used the term like F ton, like a fuck ton. And we're like, what? What are you talking about? Like, come on, and then I think the communication part is is really important. Knowing your why you're starting this thing, truly why you're starting this thing. Is it to get rich? If it's to get rich, probably don't do it. There's other ways to get rich if that's important to you. What need are you really solving? All the painful, how painful it is, etc. I would say those are the common mistakes. In that it's the team building, it's the communication, it's the fundraising. I think folks have a hard time managing their own capacity and they get burnt out. You know, I think that's common for anyone that's successful, frankly. And so it's also important to not create a culture that leads to burnout. You know, there's some semblance of balance, which is really important. But I would say that like those types of things, it's not like one thing that founders do, but the one thing that kind of upsets me the most is that they just don't know their audience. They don't know why they truly exist and why the business that they're building is so important to X, Y, and Z customers. Like it's just the basic stuff, you know, and they're not able to provide that secondary, tertiary level of detail. And I don't know, it's just, that would say that's my biggest frustration and a most common mistake.
So I realized we've been talking and so long that we're out of time. I know you have a big meeting that you have to get to.
Yeah, we have some folks coming in from the government, which is so cool. There's a lot of cool things happening in the government on the innovation front.
Oh, I wish we had more time to talk about it because I think that's a very, very interesting area in terms of like dual use technologies that can be used for government applications, but also for civilian applications. So we'll have to do this again sometime for sure.
Yeah, thank you, Zach. Thanks for having me.
Yeah, thank you
Yeah,
for
it's good to
joining.
meet you. Yeah.
It's been great having you on. And for those listening, thank you for joining the 7 and 7 show with Zack Ellison. And today we had Liz Ward, who is an expert in supply chain and the VP of ZEBOX, which is one of the coolest incubators and accelerators out there. So thanks again, Liz, for joining.
Yeah, thank you.